All right, mates, welcome back. Crypto Leverage Trading Group. Happy Friday. Hope everybody's had a great week. We've been kind of busy this week. We're going to recap a little bit of what's happening here. We are on the BexPlus exchange this morning. Obviously, it has been one of those roller coaster weeks, right? Where we're going to test support and fly to resistance, come back down to support, and then rise back up to potentially test resistance again. Obviously, you're looking at Bitcoin today above 48,000. Don't think anyone 72 hours ago was going to tell you that Bitcoin was going to go back to 48,000, right? And those are the people that are playing on strictly the 24-hour news cycle, okay? And we deal with that in every element of our lives in terms of politics, in terms of investments, especially in terms of crypto. The content is always predicated on whatever the 24-hour news cycle is, and it's not predicated upon technicals and on-chain metrics that we use. And this is how you profit from using a consistent strategy, using technical analytics coupled with on-chain metrics, okay, in these various cryptocurrencies, and then applying the methods that we teach everyone in the group. Okay, you can follow those methods. You certainly can use your own methods and strategies. There are more than one out there that are completely fine and will lead you to the way to profit, okay, and generating crypto. I mean, that's really the goal. So whichever method or strategy works for you, whichever exchange works for you, that's how you have to make these determinations as an independent, minded cryptologist. Because that's what you're doing is you're studying these charts. If you look at Bitcoin this week here, we're on the 4 hour here, and you guys know if you've been here a blink, you know that two things. One, I constantly use the larger intervals of 4 hour, especially I use the 12 hour and I use the 1 hour, and then I'll dial some in. Now, if I'm swing trading or I'm scalping, I'm going to use the lower time frames, the 5 minute, the 1 minute, 15 minute. But fundamentally, basically, it's the people that are trying to time this market, a lot of times scalp or, whatever terminology they want to use, that's out there, war, whatever, whatever that, inevitably, it's like they say, like 80-90% of them end up losing in the long run. Okay. Because you want to have a real basic understanding of what you're doing, okay, and a logic behind what you're doing, and support that it's repetitive. We call rinse and repeat, and this is simply a prime example of rinse and repeat in Bitcoin this week. And what do we mean by that? We mean by the patterns keep repeating, but in order for a pattern to repeat, it has to rinse itself, right? So in order for support to be confirmed multiple times, it has to rise back up to out of its formation. Could be a symmetrical triangle, rising wedge, could be any of these things. Head and shoulders pattern, could be any of the patterns that we talk about, right? Okay, but when we're talking about support, resistance, rinse and repeat, you can see here it rises up to test 47, 48 again, and then kind of like washes down, right? Rises up, washes down, right? Comes down, rising back up. Okay. And this is what we mean when we're talking about patterns that repeat themselves, right? And you use that from support and resistance on various levels. And what we do is we start here. And what you want to do is you want to start with mastering Bitcoin, not from an investment sense, like because Bitcoin is obviously almost $50,000, and that's hard for people to put, to have, okay, I'm going to put all my whole $50,000 crypto portfolio and buy one token of Bitcoin. Okay. That's hard for people. Okay. But what you can do is study Bitcoin, understand the patterns of Bitcoin, and then use that to correlate with your other coins, which are less expensive. What's correlated to Bitcoin above a 0.97 rate of correlation? What does that mean? It means that as Bitcoin's price moves, so too does that underlying asset's price moves, because they're correlated. It's like they're tied together. It's like Bitcoin is going to pull that, right, with it. If Bitcoin goes up, goes up. Bitcoin goes down, pulls it down. And so that's how you see that these right here, these returns right here, simply from the 19th of August, all correlate, okay, basically on the asset value, okay, but still the